Introduce my friend, my sister, Juanita Orr. Great morning to you.
Good morning.
Thank you for being with us today. How are you?
I'm good. Thank you for having me.
Wonderful, wonderful. It's an honor to have you here. I've been wanting to get you here because lately there are a lot of things going on in our community, and it's the same thing that's been happening all along. And let's talk first about insurance.
Okay.
Let's talk first about insurance and all of the things that people, so many of the things that we need to know that some, you might think they are just common sense things, but a lot of people don't have the information. How easy is it, and let's say, what is the best time to get insurance, life insurance?
Well, the best time to get life insurance is when you're not ill. Um, a lot of people, a lot of people think that, you know, when you get sick, that's the time for you to start searching for life insurance. But if you need it, then it's too late for you to get it.
If you need it, it's already too late. So this is something you want to be proactive with and not reactive.
Exactly, exactly. So don't wait until you get ill and then start searching for the life insurance. And also, the younger you are, the least expensive life insurance is. So we always tell people, don't with your young adult kids, don't wait until you're like in your elder years to start searching for life insurance. You want to get it while you're young because it's so much more cheaper. So
So
much more cheaper.
So you want to get it younger and healthier,
And
because
healthier.
it's going to be a lot cheaper. Now, once you lock in a rate, will that rate stay that rate, or does it go up or does it depend on the type policy you have?
Well, it depends on what type policy you have. You have so many different types of life insurance. But I tell people all the time there's only two types, no matter what the name of the insurance is, there's only two types. You have your cash value and you have your term. With your cash value, a lot of those type of insurance policies, they carry you for life, meaning that you don't have to renew. It carries you for your lifespan. With the term, you have so many different years that you can select from. It starts from 5 years, go all the way up to 35, 40 years. So it's according to what type of insurance you get.
And that will determine how much it will be as well. So you
Exactly.
could say, I just want insurance for the next 10 years. And is that what you're saying when you say choose the amount of years you want insurance?
Exactly. If you get a term policy and the term is 10 years, then
Okay.
at the end of 10 years, then you either have to renew that policy or you have to search for another policy.
And when you renew, are you renewing at the medical state that you're in at that time, or
Good
yeah?
question. Good question. Actually, you're renewing with most policies. You're renewing at whatever state you're in at that time, as far as health wise. Now there are some. Once you're insured with them, you're always insurable, so they never go back and check
Your
your
medical
health.
history.
hmm
Okay. Okay, so it's best then. So why would anyone, and you could probably tell me a couple different reasons, but why would anyone choose to say, I just want 10 years? Would that be like if they're 70 years old, they say, well, just give me 10 years because, I don't foresee living past 80. What's the reason that they choose an amount of years like that?
Well,
Cost?
you have so many reasons why you would select a certain policy. And for someone that chooses a 10-year policy, it could be someone that's, up in age,
Right.
and basically that is all they can afford, so it's because of the cost and their age,
Right.
meaning that they have to get something that's affordable for them at the time. Now, you do have some people, like, say, for instance, let's say you just bought a new home,
Mm-hmm.
and you're a new couple, you just bought a new home, you have a 30-year mortgage. So now you would want to choose a policy with at least a 30-year term, because if something happens to one of the other spouse, you don't want to leave that burden on the other spouse to have to take care of the mortgage by themselves.
Now,
Isn't that called mortgage insurance?
You do have mortgage insurance, but then
this is
mortgage insurance is different than life insurance.
this brings me to this question.
Mhm.
Mortgage insurance is different, but now when you say you don't want to leave the burden on your spouse, that means then that some people will choose insurance enough to bury them, but
Mhm.
then some will choose enough insurance, and I this would be based on your lifestyle. Some
Mhm.
people choose it based on their lifestyle. If they know it takes $150,000 for them to live a year, then they need to choose something that's going to accommodate that when one of the spouses is passed away,
Exactly.
or if they don't want to choose a $20,000 package and that's just enough to bury, and then they don't have anything to pay the rest of their bills, so that
Exactly.
you could choose $100,000 policy, a $200,000 policy. Of course, that's going to come with a healthier cost.
Mm-hmm. It does. Um, and I tell people, like when I talk with couples, you wanna make sure that if something happens to the other spouse, you want to have enough money to live on, especially if you have kids.
Correct.
So you don't want to choose just enough for like
Burial.
burial expenses. You want to have enough so that other parent that's left behind can take care of the mortgage, take care of the car payment, the loans, the light bill, the water bill, the kids' education, future education. So you want to have enough so that other parent can live on comfortably. The same lifestyle that they're living while you're here, you want them to be able to live that same lifestyle when you're gone.
Even more reason to start out young with insurance,
Exactly.
because you could lock in. You said somewhere you can lock in. It doesn't increase with age, and that's something I would think that people we have to ask questions when we are seeking in for insurance, because there's so much small print,
Mm-hmm.
things that if you don't ask the question, they may not tell you, and then when it's time to take advantage of that insurance policy, you'll be like, I thought I had this or I had that, and you don't. So what are some of the questions that it's important to ask when you're looking for life insurance?
Well, first of all, you have to sit back and you have to determine the reason for getting the life insurance. So, if you're getting the life insurance just specifically for to make sure that if your spouse dies, you can live your life comfortably,
Right.
then you need to find out. Okay, first of all, is it what type of life insurance? Is it cash value, or is it a term? That makes a big difference. The second thing you would want to find out, um, how much does it cost? What's the difference between the cost
Too.
for cash value and term? So you'll know what you'll be able to afford.
And is there a big difference? I'm assuming there is, because cash value, that means you said earlier you can take that out without it being a life incident, a death incident,
Well,
right?
no, with cash value,
Mm-hmm.
cash value means that you're paying maybe double or even sometimes triple more than what you pay for term.
Okay.
And that's because you're putting that money aside into what they call a savings account,
Okay.
which is a cash value account. That's why they call it cash
That's
value.
what that means.
You're
Okay.
putting that money aside into that account. So if something comes up, then you'll be able to get that money out of that account. But you still have to do your research, and you still have to really know what you're getting, because it's according to what your needs are.
Okay.
You know, no one insurance is, I would say, better than the other. It's according to your
What-
needs.
Okay, so if you have a, let's just say per se, you have a term now,
Hmm.
can you turn that over to a cash value, or would that be a new policy altogether?
It's according to what insurance company you're with.
Right, okay.
A lot of the insurance companies that carry term insurance, once the term ends, you're, I would say, forced to go into what they call permanent insurance. Permanent insurance is cash value insurance. That's what permanent insurance is. So you can't get another term with them.
Okay,
You-
and so
you
you
have
know
to
you're
go-
gonna pay more at that point.
Exactly.
Cash value, if I get it at 20 versus getting it at the cash value at 50, price is gonna be different, because it's still, even though it's a cash value, it's still based, of course, on your health.
On your health and your age.
Okay,
Based on health and age. So yeah, you, like I said, it's according to what your needs are when it comes to choosing insurance. You really have to sit down with the agent and share with the agent what your needs are.
That's bottom line.
Exactly.
I-
So
you
they
keep
can
saying,
get the
yeah, your
best
needs.
coverage for you and your family.
I get that.
And one thing I want to share too, we have to be just so mindful, you know, because a lot of times we tend to think that insurance is going to be there for us whenever we need it.
Hmm.
But if you're ill, a lot of times you can't get insured.
Right.
So that's why you have to make up your mind at an early age that this is what I need. And even though we may not be able to benefit from it early, or
It's there when
benefit,
you need
yeah,
it.
but you still need it.
And this is
And-
something I see on your page all the time. You're
Mhm.
promoting it all the time. And when you promote it, if I see it, I share it.
Mhm.
Because how often do you hear, I lost a family member who had no insurance and we had to bury that person. Everyone had to come together, put monies together to bury that person. How often do you hear that?
Oh, we hear that every day.
Every day.
Every day we experience, you know, with a phone call, someone calling trying to find out information about insurance because they got a loved one that's probably, you know, probably on life support, and so now they're trying to get insurance. Now I had one experience with a client, and her granddaughter sent me to her, and she wanted me to talk with her grandmother about life insurance. And so I went, and when I got there, I was asking her, you know, did she have any life insurance? And she shared with me she did have life insurance, and she had $500,000 in life insurance. And so whenever we hear that, that's kind of like a red flag too.
Yeah.
So so I asked to see the policy so I can sit down with her and explain to her exactly what she had.
Yes.
So at the time, I found out that her husband was in the hospital on life support, and they were expecting him to die any day.
Uh-huh.
And so when she pulled out her policy, the first thing I saw was accidental death.
Oh my goodness.
And so I had to share with her that the insurance was not going to pay off because it was an accidental death policy. And she just couldn't believe that. So I had to literally call the company, put them on with her, and we asked to speak with the manager, and the manager got on and he explained to her that that the policy was an accidental death and she was not going to be paid.
Let me ask you this. I'm sure she wouldn't have purchased just that had she known it was just that. So I would think that the insurance agent,
Mm-hmm.
did they just sell her an accident policy, or was that attached to another policy that may have lapsed or something? Make that make sense to me.
Okay, and good question. And so we get a lot of things in the mail.
Yeah.
A lot of times we
Okay.
get from a lot of banks and credit unions.
True.
We get life insurance. They want you to sign up for life insurance policies, and they're really cheap,
Mm-hmm.
really cheap. And so what they did, they got something from their credit union,
Yeah.
and it was very inexpensive. And they thought it was a good idea. Her and her husband, she said they were lying in bed one night and they were looking over the mail, and that came across, and they went ahead and they signed up, and they had it for a couple of years. And so what they didn't, I guess, notice that it was an accidental death policy. Now, another thing I'll share with your audience too. When you get things like that in the mail, please read over it, especially if it's coming from a bank or a credit union. 9 times out of 10, these are accidental death policies.
Yeah.
They are. And people, they all they see is life insurance, and they just automatically think that it's a life insurance policy, but it's an accidental death policy.
Well, to that, I say to the family members, find out what your parents have, find out what your grandparents have, because not only was this the wrong type of insurance, but when you think back, a lot of our older, a lot of our elders have old insurance policies that they paid 25 cents for a month, and they kept those little policies. You're looking like, yeah, I know what you mean. So we need to be sure that our elders are covered. They're paying these insurances every month, and then they have nothing when it's time to reap that benefit. Bishop, well, yes.
I have a question.
Mm-hmm.
What type of insurance should you buy? Like sometime the bank will send you information about insurance. And so a young person just entering the workforce,
Mm-hmm.
what type of insurance? Because I'm just hearing that you said that some insurance that we think is life insurance is just accident insurance.
Well, you go by the name. It clearly states on there. It'll let you know. The name of the insurance will tell you exactly what type of insurance it is. So basically, they just overlooked the accidental part and just saw life insurance.
That's why I stressed family members. You know, the younger group needs to take care and make sure that the family
Mm-hmm.
members are covered properly.
Mm-hmm.
And something else that I'd like for you to touch on is when you are we almost done? Oh, this has been so good. You might have to come back. When let's get this question out there. When you have a policy, does the beneficiary always know that they are a beneficiary?
No. And that's another thing too. When you get a policy, and a lot of elderly people, they treat the policy like it's gold. You know, they take it and they hide it. Now, my mom did the same thing. She put it under the mattress. Nobody knew anything about the policy, you know. And so think about it like this. If you have a policy and something happens to you, but no one knows about this policy, and you die, then who's going to call in the claim? Nobody knows about the policy. So you have to at least let the beneficiary know where to find a policy and know that there is a policy to call the claim in. Because guess what happens? The insurance company would stop getting the payments because now you're dead, you're not sending in payments, and so they just automatically think that you're not making the payment and the policy cancels. So all of these years you've been paying for a policy, and now the policy is no good because it canceled on you, but you never knew about the policy.
Okay, I wanted that to be our last question. We don't have another moment. So, family, take care of family. Make sure that they are covered. Make sure that our elders have exactly what they need when it comes to these benefits. God bless you all. And remember, the will of God will never take you where the grace of God won't keep you. That's our time. This is Pastor J, Upper Room Ministries. God bless.
You've been listening to the live broadcast of Palmetto State Gospel Music Association with Reverend Jesse